For the second time in 4 days, Bitcoin's hit a new fresh all-time high, this time hitting $70,000, the big psychological number that we weren't able to take out last cycle. So what's happening right now with Bitcoin not able to take out this high convincingly? Let's find out in today's video, looking at the macro cycle, covering Bitcoin, the stock markets, which continue to hit new fresh all-time highs, and of course the real estate cycle, which continues on up and up. It's your home of macro cycle analysis, covering Bitcoin, cryptos, stock markets, and of course real estate. It's a holistic picture at the financial markets, so you guys can see how this plays out in real time and use it to your own advantage. Make sure you do hit that subscribe button down below. We're here through the bull and the bear, back again for the bull. We've gone nowhere. We are still right here on the channel, as are our members at TIA Premium. You can find a link to that in the top of the video description to learn how to trade and invest full time, get to that financial freedom you want in your life so you can move on with better things that you want to fill your time. Also, our links to our channel sponsors here for SwiftX, your crypto on-ramp there for Aussies, and of course Bybit and BitGet as well for your international trading. I want to start out with this comment here from Virtual Bacon. Thanks for the follow. I've followed right back. Great insights here to the market. And this is going to be the big one across today's video. This is what we've been talking about when it comes to the 4-year cycle, the left, the right translated cycle, what goes on there. In this crypto cycle, it's either an early top with a parabolic BTC surge past 100 grand this year, or we're heading for the biggest bubble ever. You know, we've been talking about the everything bubble here on the channel, stretching into late 2025 or early 2026. Exactly what we've been talking about here on the channel. Defying all bear market beliefs. Whichever path, expect historic greed levels. That's a given, especially when you're in such a big bubble and prices just continue to rise. Tip, take profits after significant moves over all-time high. Be bullish, but be smart. That's what we're looking at when it comes to this current cycle. And it seems like we're tipping into this last stage of the move. This is looking at the real estate and economic cycle. And of course, Bitcoin plays its very small part within this overall cycle. When we start to make gains from BTC and cryptos, typically a lot of those profits will go somewhere else. Think about your own situation. Is your entire portfolio, whatever gains you happen to make, are you literally going to keep all of that in crypto? Are you going to keep all of it in Bitcoin and crypto, in USDT, or are you planning to take some of it out? Are you planning to take 10, 20, 30%, 50%, maybe more like 80, maybe 100% in some people's cases? Is that what you're planning to do? Are you at the small end, the medium end, or medium end, or the large end of taking most of it out? And if you take it out, where are you looking to put it? You're going to hold some in cash for this crash? Are you going to look to pay off some of the debt on your real estate? Typically, a lot of that money finds its way back into real estate. So this is a long way around telling you about what we expect coming later in this cycle, but preparing us for the Bitcoin cycle right now and the possibilities of how this cycle unfolds. Because like we've seen over the last several months, a lot of these targets, a lot of these models aren't working the way many had anticipated from the previous cycle. Let's have a look at what is working, especially around the swing chart, which continues to follow that trend to the upside. The move to the upside for the S&P 500 here is the S&P is about to be up 25% in 19 weeks. So we've seen 19 weeks about from that October low in 2023. From those signals of the market being up 19 weeks at 25% increase, 12 months later, 100% of the time, the market has been positive from there. 6 months later, again, 100% of the time. 3 months later, again, 100% of the time. And only 1 month later, there was a negative reading there where the market wasn't higher than where it was when that signal was hit. So we don't want to go down the path of it is a guarantee. Obviously, there's no guarantees in the market. We need more data points, of course, but this is going back to 1950. And you got multiple data points here in the earlier days, where you can see 12 months later, the price was up. What I find interesting about this is where the signals happened, and they happened coming out of significant lows. You got the low back here, it's roughly about 74 or 75 drop. Then you got the low in the early 80s coming out of that low. So you see big moves to the upside coming out of lows, which typically sustains further big moves to the upside. 95 leading into the dot-com bubble peak. They came out of the mid-90s, which was relatively subdued. There wasn't a huge gains coming out of there, but then it started to get a really big push on. So you see that again a couple of times leading into that peak. Again, there was about a year or two left in that run. And then out of the 2009 bottom, coming out of that bottom, that was a really strong run out of that low. But at that time in 2009, maybe some of you guys will remember, the economy seemed like it was about to implode and there was no chance of the US coming back. We had Occupy Wall Street, people sitting around on Wall Street, blaming all sorts of people. At the end of the day, the government printed everyone's money and everyone else is in trouble apart from the businesses. That's another story all aside, but the feeling and what was happening at the time was phenomenally terrible for everyone, yet the market was up from that point and basically continued up. It was the best time to be buying when everyone thought it was the worst time. Think about that as we lead into this peak and then the potential collapse from that point. Same deal again out of 2020, COVID bottom, and then of course as we come out of this bottom that happened in 2022. On to the next thing. So that goes from the big timeframes down to these short timeframes now. Just looking over this little period here, leading into the election for 2024, historically, March has seen a bit of a period of stagnation, and we have had many significant lows in March. I'm not saying the market is going to collapse in March, but sometimes it's good just to have a little bit of a pullback. And when you look at the pullback here, which in 2024, we've seen roughly 9 to 10% from the beginning of the year, but any sort of corrections are typically seen as single-digit corrections. But could it be a bigger correction in 2024? Could we see a recession? Remember what they've been telling us, 2022, 2023, first half, second half, first half of 2024, now it's second half of 2024, then they'll tell us it's 2025. Let's forget the idiots who keep talking about recessions. It just happens so often and they are basically wrong more often than they are right. The old saying of the broken clock. Consecutive number of days of inversion on the yield curve. So the yield curve comes up. We've covered it here on the channel multiple times, which is why I suggest hitting that subscribe button down below so you stay up to date with unpacking this data and basically debunking all of the BS that we hear out in the media from the biggest names out there telling us that there's got to be a recession every year. Looking at the recessions, in terms of the reversion, we're by far the longest yield curve inversion in modern history. So this is the longest time we've been inverted on the yield curve. And so typically what we would hear is once the yield curve is uninverted again, that's when the recession starts. But we've basically been in an inverted yield curve for the longest time in history. Maybe as it starts to come out, we'll still have a bit of time left. So I'm not saying that we're not going to get a recession. It's just taken a lot longer than many have anticipated. Some are still talking about the change of the recession meaning, the way that they had first classed a recession with 2 negative quarters of GDP growth. Forget about it. There's no recession. The charts are showing that. The markets are going up. Let's not try and trade the economy. Just trade the markets. At the end of the day, you need to put your money somewhere, and typically you'll put it into stock market, into stocks, Bitcoin, crypto, real estate. If those asset prices are going up, forget what the idiots are saying in the media about recessions all the time. They call it every single 6 months and then kick the can down the road. Just keep trading the charts. What the charts are showing us is that they are clearly still up. Now, the red line is what we looked at earlier this week and last week, just looking at a cup and handle here. So just a quick mention, we've got the cup, we've got the handle, and I want to make this specific so we're not just drawing lines all over a chart without any sort of objective look at how this is working. What I've got is the measure from the top to the bottom and then projected that from the cup or the handle bottom to the top. And it seems like we've just hit that to the point right now. So the S&P 500 has basically completed that. As for the closing price for the S&P at the end of this week, it's another all-time high weekly closing price. The daily, we've got a pivot here from the top, lower close, still a gap there. This typically isn't a bullish sign when you see a bar or a candle like that, but the market still needs to show further signs of any sort of weakness. You'd want to see it close the gap and then break back down past the tops here and those bottoms. So basically past the support and resistance. It could just be a short-term pullback again with a single digit. That's where you'd want to see the market break down from roughly about 5,060 points to give the signal that we might see further downside. The NASDAQ, same sort of thing here. It's been pushing up. It's basically dead on the same move that it did out of October, the move that we've been tracking here now, from the March bottom to the July top out of the October bottom. So it's tracking almost identical to what it has done already in the move from 2023. Nice high closes there. And again, similar sort of thing here with that reversal pattern showing up. Australia, new all-time high. Worldwide bubble. The US dollar is finding some weakness here as we've been anticipating. If you've just started following the channel, this is where we were looking at a peak. It was the day before the peak. If you guys remember back in 2022, where everyone was talking about the US dollar surging against the euro and the pound, and you had all sorts of people talking about that. We were looking at this as being the peak of the US dollar and then a collapse to follow from there. This is going to take years. And in the second half of the real estate cycle, we anticipate the dollar to continue down from this point, but it takes a good amount of time. There's clearly a lot of hype within the Bitcoin and crypto community right now, with Bitcoin hitting new fresh all-time highs, this time the second time in 4 days, and now finally hitting $70,000. There's plenty of narratives getting thrown our way. Some are working out better than others. You've got the ETF, which had its correction in January, going down about 22%, now getting fed up a lot to the upside with that big narrative that the ETFs are buying more than what they're able to produce every single day. And we still see corrections along the way on big days of ETF volume. We also have the halving coming up in roughly 43 days' time. This, on top of the other narratives that are built along the way for Bitcoin, eventually break. Are they going to break now? I am not trying to suggest that at all. All I'm talking about here is to keep an open mind about how the cycle plays out. Because what happened in the last cycle is a lot of narratives got swept up in this top. Many different narratives. ETFs coming was one thing. The masses aren't here. The smart money, the institutions were buying up a lot of Bitcoin. And the previous cycle, 2017, the same sort of thing here at the peak as it ran up into $20,000, which essentially called the top. There was a lot of narratives about Bitcoin going to 50,000. We're still early. There's going to be more people buying. You just wait. All I'm saying here is to keep an open mind as the market keeps going up. Not bearish whatsoever. This is the sort of stuff that many wish they heard in the previous cycle. It's the same thing that happened. So we're still not really breaking through to a new all-time high. So there's still the possibility of much bigger upside to come. So I just wanted to clear that off before I get further into what they're not telling us about crypto and this Bitcoin cycle with how things can progress. Now, there's nothing set in stone that a model has to play out. Just look back to this particular model that I had up, and we can dissect this as well. We were looking at a rejection at the 50% level, a correction, and then another test of the 50%. The previous cycle in 2015 through to 2017 seems to be most closely correlated to what we're going through now, as we only had a small correction here. In terms of a percentage from the top to the bottom, it was still 40%, but in terms of time, it was about 5 months, and then the market was able to break through and go on that mega run to the upside. Whereas in 2019, 2020, it was a deeper correction. Obviously, COVID came through, and it took a lot longer for Bitcoin to break through that 50% level before it went on its mega run. Whereas this time, we had a couple of months holdout at that 50% level. So it was still a vitally important area. But the idea here is that the market was showing far more strength based on the 50% than what it did in previous cycles. It was able to hit 50%, hold up relatively well, correct a little, and then come back, close above it. And then basically we've seen the market leap from that point. That's why the 50% level is so important, because it tells us strength and weakness in a market. Now, the other way we get to trade this is with the swing indicator, this yellow line here. You can find a link to that in the top of the video description, 7-day free trial. Check that thing out right now. And in terms of the movement to the upside, this is how you're able to trade it, looking at where you can place your stops beneath the swing bottoms and how you can enter these moves and stay in with the trend even when things seem crazy, even when it seems like the market should be going down. This thing keeps you on the right side of the market, essentially the profitable side, whether you're going long or short. So with an understanding of how that swing chart works, the 50% level, the strength and the weakness, we can move on to understanding timeframes. So the timeframes for Bitcoin going to a new all-time high from the 2013 cycle was 39 months from the top to when it first touched the all-time high, had a month pullback, and then started to break to the upside. Now, last cycle, Bitcoin took 35 months to test the all-time high, and then essentially it broke through from that point. This time, however, it's taken only 28 months to test the all-time high, and we're still waiting on that confirmed breakthrough with a monthly close above the old all-time high. This begs the question, is the cycle shortening? No. I don't know how many times we have to answer that, but that's okay. Sometimes people get drummed in their head with particular models. We're not discussing whether a cycle is shortening or lengthening because the cycle is essentially 4 years low to low. It can move a couple of months either side because you're looking at bigger cycles here. You're not trying to pick the exact moment. But in terms of where that top comes in, maybe you've heard by now, just looking at the left and the right, if the top is to come in within the first half of the 4 years, that would look like a weaker 4-year cycle, meaning you would see a top and then a longer bear market before you saw a move to the upside. So is it shortening? Some would argue that that's a shorter cycle to the top, but that's only if you're measuring to the tops. The point of the analysis when you're measuring 4-year cycles, Hurst cycles, is from the low to the low. That's the analysis that's been done across markets for decades, and it works across all markets when you're looking at cycles. So if you are a cycle trader, that's what you'll be looking for. The lows to the lows give you that time frame. The top helps you identify the strength and the weakness. So we can move into the tops now, what they're not telling us. Well, the way I like to look at it, because we just get fed so much of the same thing that we're going to see this explosive move and then it's all over. No one knows for sure. That's the big thing here. No one knows for sure. So if you've got tools that can help you identify the strength in a move to the upside or the weakness in the move to the upside, then you're 10 steps ahead of your competition, because all they're looking out for is a move up. They think they're going to pick the top and sell, and then they think it's going to collapse from that point. But markets have an interesting way of working across into their final tops and then, well, essentially making their final tops, like we found out from the previous cycle where there was that big run up, then a couple of months pullback, just over 50%, and then it ran into another final peak, which still got the right translated cycle, meaning that we were going to see a roughly 12-ish months of a bear market. So even if we see a top come in over the next couple of months, maybe this month, maybe next month as we lead into the halving and all the hype dies off, it hits $90,000 or $100,000, who knows for sure, and we see the market cool off from there, you possibly will see the narrative start to pick up around Bitcoin's over. It's finished. We had a left translated cycle. Forget about it, get out, go and do something else. That is possible, but this is the key thing here where you can start to dig in and find out whether it is going to end like that or if it is just time to cool off. Once we get that top, then we get to figure out where does that low come in. If the low comes in above the previous old all-time highs, and you can give it a little bit of tolerance because of course Bitcoin is quite volatile, I would look down to somewhere around the closing prices of the previous peaks, all the way down to roughly $48,000, because that's the monthly swing top before Bitcoin broke down. So it's a key level there, key price point, somewhere around those levels. So if it did come down, had some spikes and then some closes back above, that would still suggest that we are in a bull market and it's just consolidating from the previous significant move to the upside. We've had now 6 straight months to the upside using the swing count, not the green count here. And so eventually you typically see the market at least consolidate and cool off for a little period like we did back in 2021. So basically 3 years ago, we saw a peak in February, a peak in March, a peak in April, and then it cooled off in April and had the drop back in May and June, essentially around that period when the Northern Hemisphere goes on holidays for summer. The old saying of sell in May and go away comes to mind. So if that occurs at higher levels, at higher prices, that could be the start of another reaccumulation price after a big blow up move here, and the market just giving it more time until it can come back and test another high. That's what we're looking at moving forward, and there's no confirmation of that. I don't sit here to say that I know the exact answer. I'm just trying to read the chart and figure out where the strength and the weakness lies in the supply and the demand. What are we seeing next? Are we seeing more demand to the upside, or are we about to see a little more supply come in? And if so, where does that bottom come in so we can identify where what the next move may entail? In terms of the swing chart for that next move, should that swing continue to remain up, that at least gives us some signs that we might see further upside. Like we saw with the previous cycle, when that swing bottom came in, once that broke down, it was game over. But there was still a little bit left in it for the masses to think that there was still a possibility of the market going up from there. Same deal with the last cycle. You had the swing bottom come in, and then it basically went dead from that point and collapsed from there. Of course, it is a big long-term time frame, so you'd probably want to get a little bit closer to the market, in which case we can bring in the weekly chart. So you've got the weekly swing bottoms here, and as that market started to break down last time, as an example, in November, the weekly swing bottom broke, and that was one of the first signs, not the only sign, but one of the first signs that this run could be coming to an end. You had the breakdown of the weekly swing, one of the most significant pullbacks it had in the entire run, or the most significant pullback in that entire move to the upside, which was telling you that supply was coming in and demand was not meeting supply. Then you had this weak rally to the upside, and basically from that point, the show was over. I know it sucks to hear about the possibilities of markets breaking down, and there's still more to go in the upside. People get annoyed. I see it in the comments saying, you're so bearish at this time. My time to be bullish is at the bottom. That's the best time to be bullish because you're buying at the lowest prices. The worst time to be so bullish is near the tops, but everyone wants to hear it like that. That's what they don't tell us in crypto every single time. And I see it from the comments section from people at the tops. Last time I got called all sorts of names in May, April 2021, around those other peaks here, as the market was coming down to November, December of 2021, all sorts of names. And it wasn't until the market had dropped that they said, I wish I had listened to you then, thinking about selling, thinking about protecting their portfolio, and obviously not getting too hyped up in what goes on out there. That's the idea of trading and investing for the long term, not for the short term, getting hyped up. You've got plenty of moon boy channels out there that will get you hyped up. So if you're feeling a little depressed after this, maybe go and watch some of that moon boy hype to get you back in the mood. But I'm not saying that this bull run is over whatsoever. It's just an interesting time to think about what could happen next. And should we see certain things like that because of the hype and you start to see the market pull back, it doesn't mean it's over. So I'm definitely in the bullish camp in that regard. What it does mean is it's time to assess, is this going to be a healthy correction, or is it the correction that means the cycle is over? And there are some key signals that I would use to assess whether it means the cycle is over, or are we just cooling off? Are we just taking a bit of a chill pill, getting ready for that next move? In which case, get flippin' bullish again, because we got another leg to go in this run. With just 43 days to go until the halving, hopefully this has been a bit of a pep talk in case of what we see next. No one knows what's going to happen on the black side of that chart. It's like going to war, playing a sports game against another team. You don't know what they are going to do. Sometimes you see some signals that they give away and you can act on those to your best advantage. That's what we try and do here, looking at the charts, assessing strength and weakness, looking at those timeframes and how the market prepares for that next action. Subscribe to the channel if you haven't already. We're going for 400,000 in 2024. Let more people see this type of content rather than the moon boy stuff out there that basically strips them of their profits. They get excited to the upside, depressed to the downside. I'll see you guys at the next video. Have a fantastic weekend. Until then, take care and peace out. Got it. Got the balloons.